This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Wednesday, July 22nd, 2026. I am John.
And I am Mary. We are your smart friends on the go. We cut through the noise to show you exactly who benefits from today's headlines and why.
Let's start with the gist view. Today, we are looking at the medicine cabinet.
Donald Trump is proposing a massive new tariff on generic drugs. He wants a 100% tax on imported generics starting in August 2028.
And that penalty would automatically jump to 200% a year later, according to Politico Europe. Let's break down the incentives here.
Generic medicines run on razor-thin profit margins. They are cheap to buy, but they are also very cheap to manufacture overseas. Importers simply cannot absorb doubled costs.
If you slap a 100% tariff on them, foreign manufacturers will not just pay it, they will abandon the United States market entirely.
So, who benefits? Domestic drug manufacturers do. This policy gives them a massive pricing umbrella. Without cheaper foreign competition, American companies can inflate their premiums without actually improving their efficiency.
Exactly. It weaponizes trade rules to shield domestic incumbents. It takes a vital cost-saving mechanism and turns it into a giant regressive tax on American patients.
To be fair, there is a real geopolitical risk right now. The global production of active pharmaceutical ingredients is heavily concentrated. A lot of it happens in adversarial nations.
That creates a severe single point of failure in our supply chain during a crisis.
It does. But this tariff is a blunt instrument. It breaks the current distribution network before any local factories are built. It is like blowing up a bridge today because you plan to build a ferry tomorrow.
Let's shift to the global overview. Sticking with American healthcare, let's talk about labour friction.
A new survey from StatPlus shows 24% of United States workers stay in jobs they do not want. The only reason they stay is to maintain their health insurance.
That is nearly a quarter of the workforce. Economists call this job lock.
Look at the resource flows here. Tying essential healthcare to employment artificially kills labour competition. Companies do not have to compete as hard on wages or workplace culture. They keep their talent just by holding the hostage of healthcare.
It traps human capital inside incumbent firms. Instead of moving to more productive or innovative sectors, talented workers just stay put.
Moving over to the Asia Pacific, Australia is making a massive play for digital infrastructure.
The Northern Territory just granted land to developers for a giant data centre project. Bloomberg reports this could attract 40 billion Australian dollars in private investment.
This is a fascinating leverage of resources. You have a regional government using its physical assets, basically cheap, available land, to pull in foundational tech infrastructure.
They are stepping outside traditional global tech hubs. They are trading local dirt for digital gold.
Now, for the European perspective, let's look at Germany. Economic Minister Katherina Reiche has introduced a new defence tech strategy.
She is from the CDU, Germany's centre-right conservative political party. The plan has two main pillars.
First, it eases dismissal protections for top earners. It makes it easier to fire highly paid staff.
Second, it funnels direct state money into defence startups as venture capital. Venture capital, or VC, is just the early-stage financing used to grow high-potential companies.
Easing firing rules actually makes hiring much less risky. Startups are more likely to take a chance on expensive talent if they can let them go easily later. That is a vital liberalisation of labour laws.
But the direct state investment brings a lot of friction. When the state is your main investor, founders change their behaviour.
Right. They stop optimising for commercial viability. They start optimising to win government grants. It risks serious bureaucratic cronyism. You end up building what a committee wants, not what actually works on the battlefield.
The counter-argument is that Europe's VC ecosystem is highly fragmented. It lacks the deep pockets to quickly scale defence tech on its own. State co-investment is a necessary catalyst for immediate national security.
Over to Russia. The Russian Ministry of Finance just hit a financial wall. They had to suspend their domestic bond sales.
Politico reports they simply could not find buyers. Local banks demanded yields, which is the return they get for lending money, between 13 and 17%.
Meanwhile, the Central Bank of Russia is holding its key interest rate at 14.25% to fight wartime inflation. So local banks want a massive premium to lend to the state.
This standoff is a huge deal. It restricts the Russian state's ability to finance its operations using its own domestic debt markets. The local credit card is basically maxed out.
Finally, a major shake-up in Ukraine. President Volodymyr Zelensky has dismissed his army chief, Oleksandr Syrsky.
According to ZDF, General Mikhailo Drapati is taking his place. This follows serious domestic protests in Kyiv.
Those protests originally started after the earlier dismissal of Defence Minister Fedorov.
It highlights a very direct power dynamic. Public backlash is forcing rapid pivots in Ukraine's military hierarchy.
That is the news. Let's take the temperature of the day. Across the board, we are seeing the messy collision of state power and private markets. Whether it is tariffs protecting domestic drug makers, a freeze on Russian debt, or German state capital trying to build a defence sector, governments are aggressively steering resource flows. Innovation is happening, but it is increasingly shackled to national security and protectionist walls.
Spot on. Thanks for joining us on The Gist.
If you found today's breakdown useful, we would love for you to join our daily newsletter. It is completely free and it lands in your inbox every morning with the same clear, no-nonsense analysis.
Just tap the subscribe link right there in the show notes. Have a great Wednesday and we will catch you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.